Just wanted to welcome you to the Top Star podcast. Joe, how are you?
I'm good, Leslie. How are you today? And welcome everyone to the podcast.
Mm,
And
mm.
we're going to enjoy today because the discussions are a bit sensitive because it's a difficult topic.
It is a very sensitive and difficult topic. But as I say, remember to like, subscribe to this channel. Also, check out our website at www.topstarpcs.com.au for some of our latest guides if you want more information. But anyway, let's jump into the podcast. It's all about fun, it's laid back. We're not going to be too serious. We don't want to sell people ourselves. We just want to have a discussion, as we'd like to say. So, so we'll jump into it. Let's talk about the RBA. So you see our headline, a top star discussion. RBA rate decision of June 2024. So by now, I think the news has trickled down that the RBA has kept, the Reserve Bank of Australia has kept the rates unchanged for the fifth consecutive time at 4.35%. Again, which is a welcome relief, particularly into the property market and those, who are wanting a bit more stability, because I think it will give people about, 6 weeks, because the next rate decision will be in August. So at least people have got a bit of respite, a bit of clarity into the new financial year of what their obligations are. And, as people in property, we always want the best for people, whether they're buyers, whether they're sellers, whether they're renters, investor owners, because it's a whole cycle. So I'll let Joe make some comments as we share the screen based on what some of the comments which the governor, our RBA Governor Michelle Bullock, said about this decision. Joe, over to you.
So, from my end, I'll just say a quick overview of my understanding of the impact of the RBA keeping the interest rates on hold. The impact can be different depending with who you are in the market. If you are a home buyer, investor, or renter, the impact, the interest rate will affect you differently. So for home buyers, I think uh, mortgage affordability is one thing that can come in as a relief for people because the interest rates being kept on hold, it means you can actually budget and plan without the nagging sense that the interest rates for borrowing is going to increase. But in saying that, there is no guarantee that in the next decision, they are not going to increase the interest rates. But at this stage, just looking at them holding for a few consecutive months, it's a sigh of relief for home buyers, meaning that you can borrow money at a cheaper cost, which is somewhat already high at the moment. And for the home sellers, it's quite good because it makes the market a little bit stable because the home sellers were now a little bit scared that if they increase the interest rates, it will reduce the affordability of mortgage, which will push the house prices down, which now for home sellers, the market is a little bit stable and the prices are less likely to fluctuate, except for the extremes, like for Western Australia, for Perth, when the decision was passed, the prices of housing just went a little bit up,
Yes.
which I could not really uh, explain uh,
Mm.
because the houses are already expensive
Yeah.
at this stage. So, but for investors, uh, similarly to the home buyers, for investors, they benefit from the stability of the financial costs of borrowing for them to purchase investments, and also for repayment of their investment mortgages, which means they can have predictable yields. The real return of investment, they can actually predict it. But if the interest rates goes up, it means that can also chew into their investment yield.
Yeah.
So
Yes.
keeping the interest rates on hold, it's a fantastic thing for investors as well. And lastly, for renters, it's a good thing because uh, renters don't usually get affected straight away because usually rents are regulated. So if someone has already got a lease, they might not get their rental increase for a certain period of time, depending with the state
Mm.
that they are
Okay.
in or territory that they
Mm.
are in.
Yeah.
But keeping the interest rates steady, it means the housing availability and affordability is good for the renters, which means there will be a little bit more competition and you'll see a few
It's a
queues.
that's a yes and no statement, because depending on the
Mm,
investors' financial
mm,
circumstances, I think,
mm,
particularly in Queensland, in Brisbane, the rental market is very hot. Particularly in a certain property or certain area, you can get 12 to 15 groups show up for a rental inspection. So for renters, yes, they might say there's a fixed term agreement, and
yeah,
maybe investor owners can only pass the increase if it's a new lease, particularly with made some of the rental changes which have been made in terms of rental increases.
yeah,
But going back to what you've alluded about the interest rates, how it affects different people. So those who are on a fixed mortgage right now, right, they will not see any change in their current repayments, but they need to remain vigilant, particularly if that fixed term is now
mm,
nearing the end.
yes, yes. That's what
So,
my friend from Walk the World says. It's a mortgage cliff.
yes. So once that fixed rate is coming towards the end, they need to be mindful. This is, again, want to put a disclaimer. This is no financial advice, but we're saying that those with a fixed mortgage, yes, your repayments are remaining the same, but be mindful and start to prepare for certain arrangements with your bank,
Mm,
because you may have been in agreement which was, at 1%.
yeah.
Now you're going to the 4%. So there's a big difference in the monthly repayments. Joe, what do you want to say about that point? I see you're eager, you're chomping at the bit to jump on that one.
With that one, I think it's something that people have to be extra careful because the amount that the mortgage repayment, the premium jumps from
Mm,
1% to 4% is not just a 3% increase in your mortgage repayment. It
mm,
can be a 2x or 3x in your mortgage repayment. Uh, Depending with it, there are so many nuances in that,
mm, mm.
but you can see someone who was paying 1,800 per month for their mortgage repayment. If their interest rates go from 1% and straight to 5-6%, you can see them now paying 3,000, which
Yeah,
is not money that you can find anywhere.
yeah,
You cannot have a promotion that jumps you from what you're earning now to 2x your income, which means you have to actually shave off that amount from other things, which is there's a
yeah,
danger now that the money that you're supposed to put aside for food or for other expenses is now being channeled to mortgage. So they, I think there will be need for some financial counseling or financial uh, consultation, and also talking to your bank earlier before your mortgage goes into that cliff of
Mm.
turning from fixed to variable.
Yeah.
Mm,
Because you can see, particularly with this trajectory of the 5 consecutive holds, basically the RBA is trying to say inflation is on a it's on an even keel, but it's not something which we can rely on because it can change. The inflation numbers can quickly and dramatically change, so that in August there's another percentage, whether it's 25 basis points or 50 basis points. Um, so in terms of the property dynamics, right? If you look at the market stability, it avoids the disruption because once there's an increase, right? I think people, we need to be really honest with each other, particularly with the cost of living pressures which are there. We don't want this Top Star podcast to, what can we say? Uh, Puffing people up and, trying, we want to be realistic. There's a high cost of living pressure. And the property dynamic saying, oh, prices are rising, prices are rising. But if this pressure continues to hold, right, and it extenuates, what are the property dynamics? You might say, okay, I'll hold for another 12 months.
yes.
And if there's 3 or 4 interest rate increases and people can't afford it, what
Yeah.
do we start to see?
You don't have buyers for that property, but their price is high, but you don't have buyers. So
Mm.
you've got the value on paper that you cannot transfer into the actual value in your bank.
Yeah.
So at the end of the day, there is high risk of you being pushed to take a lower price than your your expected amount for a price for your house.
Yeah.
Mm.
And then that leads, so it's a catch 22. So people have got the choice: take advantage of these rapid price increases, or you can hold. But it needs to be, I think there's a philosophy we speak about it. It needs to be something which comes from your feeling, from your gut. It's not a decision where you make because you're hearing so and so sold their property for an X amount of profit. If you feel that, okay, I can hold for another 6 months, if there are any other changes, you pick it up. So go ahead, Joe.
No, no, I wanted to just say, on top of that, there are also some differences. If it's a family home, if it
Mm.
goes in value, it doesn't make any difference. If
Mm.
it falls in value, it doesn't make any difference because you are in it for a long run. But if it's an investment, you need to get something out of it. So you have to be playing carefully.
Yeah, you,
So
I
so
think
that you
there's
can
an
lock in. Yeah, go ahead.
I think there would be a need for a lot of agility and smartness in terms of how you approach the financial decision. Talking to your financial planners, looking at your investment, your yields. What are you yielding? Because right now, at the moment, there's a good rental yield because rental prices are going up.
Yes, yes,
Uh,
yes.
but with a lot of these governments wanting to catch up, especially we are gearing major into election years, particularly in Queensland, to an election year. You've got the federal government going into an election year. You don't know as an investor what they're going to do in terms of housing and use it as a political arm, particularly to yeah.
Yeah, politicians can throw a spanner in the works easy.
So yeah, so as I said, with any investment, there is that risk and reward,
Yeah.
um, and you know what I mean. So yeah, it's an interesting decision. It's an interesting decision. People were expecting an increase. Anything else you want to add on that, Joe?
Yeah, I was anticipating an increase as well. Even
Yeah.
way before the decision, I was saying, yeah, there's gonna be an increase
Mm.
because my thought process was, because inflation is not a head a head uh, indicator, it's a tailwind indicator, like a tail indicator. So we
Yes.
will see the impact or the inflation after a few months when it's already biting.
It's already
Meaning
by.
that, yeah, meaning that right now we're feeling the cost of living,
Yeah.
uh, but it's not necessarily indicating on the inflation or CPI indicators. It will start
Yes.
to reflect maybe after 3 months or after 4 months. Then
Can
we
you
will
can you
see,
can you can you explain that further in layman terms for us?
or in layman terms, so uh, with inflation, they do the calculations, right? Either on a month to month basis, right?
Mm-hmm.
And then they then annualize that inflation number.
Yeah.
Okay, so if I say it's a tail indicator, meaning that the
Mm-hmm.
inflation is already now, but the indicator that they are going to tell us about the level of inflation, it will be announced maybe a month or 2 months later.
Later. Yep.
So, which means that the numbers and the figures that we get from RBA are already delayed to
They
what
are
we are
already
already
delayed.
experiencing in
Yes.
real life. So in real life, inflation is actually biting. In
Yes.
real life, cost of
Coastal.
living is biting.
Mm.
But on paper, the inflation numbers are good.
Yeah.
The CPI is good. The GDP is good. It's a little bit sketchy, but it's okay at the moment compared to other first world countries,
Yep.
like our counterparts in the European Union. So at the end of the day, you suffer, but the numbers are showing something different, and then they will start to show later. And you say to yourself, I already know that.
Yeah.
That's why I'm saying it's a tail indicator. So at the
Yeah.
end of the day, eh, if there is too much hot inflation, that's
Yeah.
going to be reflected in the next board meeting. Then
Yes.
they might increase the interest rates, of
Mhm.
which if they increase the interest rates, it's gonna be pandemonium, because the banks are quick to increase and they are
The
slow
banks,
to.
but yeah, but some of them have already increased. I was reading an article about, I think it was the HSBC, they increased. I think Macquarie increased. Some of them increased even though there was a rate hold. So I don't think, even if they do it again in August, if they hold, I believe the banks will start to move to put pressure.
Yes, because they are already anticipating that move higher,
Yeah.
because they are economists. They are also working behind the scenes
Yeah.
to assess the information that's coming from all over the market indicators, and they know what's on the market, and they,
Mm.
because uh, they are like first line assessors of what people are actually doing with their monies. They
Yeah.
see, if they can monitor, they can see the expenditure, they can see the level of money that's going towards repayment of loans, and money that's going towards groceries or personal upkeep. And they can see that the personal upkeep and the grocery and other expenses is shrinking bit by
Yeah.
bit, and the mortgage payment is expanding.
Mm.
For the same home that you were living last year, you were paying 2,000. Now you are paying 4,000,
Yes.
which means if you were earning 6,000 per month,
Mm.
now you are left with 2,000 to play around with per month. And from that 2,000, you're saying you using like $500 per week
Yeah.
for your gas, for your power, for your food. For people are doing it tough, bro. They're
People are
doing.
doing it tough, especially people when we talk to some of these owners or some of the investor owners in discussion. There is that pressure. Even the tenants are feeling the pressure. They need to have roofs over our head. So, look, the market it's good. It's good that the bubble is there. But as I said, watch your investments, watch how you're planning for your financial future. Always get advice from people you respect, people you trust in who are more experienced as financial advisors, your mortgage brokers. Always have a chat with them, your lenders. Or reach out to people like us here, Topstar. We can give you an overall valuation based on what you can get in the market. So it's all about having those discussions and monitoring the rates because, as I said, I think there was a statement here. This is an article from the Guardian that, if you can say, it says inflation has come down a long way since it peaked in 22, but it remains above the target, right? So they wanted to come back around the 2% range. So, and I think we are a long way, a period away from that. So I hope you guys have enjoyed our quick session. These are always going to be short podcasts. We don't want to have a long one. We can have a long one, I think, when we bring some of our guests. We're organizing some guests to join us on the Top Star podcast to talk about property investment, what to look for, what to look for in buying, and having a conversation. As you see, we're all laid back. I was having my beetroot chai latte with beetroot powder.
My tea is getting cold though
Yes,
because I haven't been able to sip it because I was talking too much.
you were talking too much, and I can hear the my lovely bambina screaming at.
My papinas is now they're calling daddy to come back to the living room,
Yes, they're
and
calling
I
for that.
gotta.
No, it's good. It's good. No, thank you so much, Joe, for the good session. Let's keep it there. As I said, our podcast here, we endeavor to have an episode up every week or every fortnight, talking about property, talking about what the economy is looking like. As I said, we're not going to be all roses and fairies as you'd expect. We're just going to have an honest, heart-to-heart conversation. So visit our website at Topstar PCS. That's Topstar, P for Peter, C for Charlie, S for Sam.com.au. We've got some lovely guides there. Some 11 steps to sell your property faster. We've got another guide about, don't give a stuff about school zones, which was well written. And then we've got another one about, skip staging. So have a look at our website. That's topstarpcs.com.au. Joe, thank you so much. Have an awesome week. We'll be in touch.
Thank you, everyone. You have a good one.